Hey, everybody. Welcome back to another episode of Built to Scale. And today's guest, I'm super excited about. Her name is Rachel Glock. And these episodes are long overdue. So actually, we have a couple episodes with Rachel. Today, we're going to dive into cash versus accrual basis accounting, but really appreciate having Rachel on. Rachel is actually one of our CFOs at Brady CFO. And she is a construction and real estate development expert, really is an in-depth finance expert in those arenas. And so super excited to have Rachel on. Welcome, Rachel.
Hi, how are you?
Doing great. That super excited to have you on. This is long overdue that we need to get you on a long time ago.
Yeah, well, I'm excited to finally get the opportunity and kind of chat about a couple of areas that I've got quite a bit of experience and obviously pretty passionate about. Yeah, this is going to be great.
Awesome. Can you share a little bit of background about yourself with the audience? I kind of highlighted there that you have a lot of depth in construction, real estate development. You mind highlighting some key things about your past, your experience that really kind of proves out why we're going to be talking why about what we're talking about today.
Yes, absolutely. Well, I from an education perspective, I was a finance and accounting major. Spent some time in metal manufacturing company, and then pretty quickly moved into the construction. Worked for a general contractor, kind of regional out of Lincoln, Nebraska, for a number of years, and was just given the opportunity to learn a ton at that organization. So it was very fast paced, quick growing. He was your serial entrepreneur, right? Getting into real estate development, and we had an equipment rental company and just all different facets of construction. And so I learned a ton there and got a lot of really great experience. Stepped away about 5 years ago and have just been working as an advisor, consultant, and fractional CFO since then, but have had the opportunity to work with a lot of amazing clients. So, some trade contractors, still, I'm doing some real estate development projects and other things. And so I just really have always appreciated having the ability to help others as they continue to grow in their businesses and learn about how other organizations do things and maybe best practices and just help them as they continue to grow and move down the path.
So yeah, one of the topics or the topic that we're talking about today on today's episode, it is very relative for construction business owners looking to grow because this is a very common thing that a decision that many of them face. Cash versus accrual basis accounting, and for our audience out there, if you're not even familiar with the difference, that's probably going to tell you that you're probably on cash basis. I feel like gut says you're probably on cash basis if you're sitting here and you're wondering what in the world are we talking about. But Rachel and I, as we were prepping for this episode, we felt like it would be really good to obviously provide an overlay of the difference between the two. But what are the inception points at which you begin making a move towards accrual basis? Most businesses are not going to start on accrual and convert to cash. It's going to be opposite, and there's reasons why. But on a high level, cash basis accounting, you record your revenue when you actually get the check from your client, and you record the expenses when you pay them. Obviously, that can be a little bit of a challenge in terms of understanding how you're performing because when you finally collect on that invoice you sent the client, it may be 3 months later from when you actually paid payroll, as an example. So matching those two and being able to identify, hey, what's going on here, a little bit tough. But one of the big things that really drives, cash versus accrual basis accounting, especially in construction, is related to the WIP. And that's probably a term that if again you haven't heard, in construction, it is the driver of all accounting and construction, right? So, really interested, Rachel. Can you kind of describe the WIP for us? What's a WIP?
Yes, a WIP report, work in progress. And so for each project that you currently have in progress, you're going to have a line on an Excel spreadsheet that this is my project. Here's my contract value, what I estimate profit to be, respectively, then how much cost would I have accounted towards that project in order to achieve that profit level? And then how much of that cost has been incurred to date? And generally, then what the percentage completion, which is based on estimated cost versus cost that has come in to date. And then we're estimating your earned revenue based on that estimated completion. So, and some contractors are going to extrapolate that out to include a number of other different metrics or things that they want to track related to each project. But most simply speaking, and I think sometimes that's the easiest way to look at it, is just at the ground level. Let's start here. We can continue to build and look at, how much profit was earned last year versus this year, or some of those additional metrics. But just most generally, um, on a per project basis, how much revenue we've earned based on the costs that have come in to date. And then based on how much we've earned, we're going to look at the difference between how much we've billed the customer and how much we've actually earned of that amount. And that difference, we call it the over under billings. Then generally we're going to record an entry each month to kind of recognize or true up how we actually are performing versus what we've built. So, I've worked with clients and customers in the past where there may be a smaller contractor on a project. And so the general contractor owner of that project's trying to help them out with cash flow. And so they'll allow them to bill in advance of maybe completing some of that work. And so, especially in those cases, I think it's hard for the contractors to keep line of sight on where am I actually sitting? How are these jobs truly performing? How much of my cash balance is real and I've actually incurred the cost of, and how much of it is the circumstance and situation? So it's just a really great kind of gut check on this is how I'm truly performing. And then also, as you continue to grow, you will get to a point where the IRS will require accounting and reporting. And so, it's not until you hit around the $30 million mark for a few years, but it's also just a great way as your business continues to grow, as your projects maybe get more complex and it's more difficult for the owner to be involved in the day to day and to understand how each project's performing, to keep line of sight on all of the projects on a regular basis through a really standard calculation and form.
A big part of this too is understanding, you know, um, some business owners sitting around 10, 15 million, they may have a good feel, especially if they have some larger jobs, they may have a good feel on what the status of that project is, et cetera. The problem is when they hand off their financials to a banker, right? Or they hand it off to a surety rep, and surety reps wanting to understand, okay, where are you at on your jobs? And you may feel like you can verbally tell them, we're doing about this, but they're going to want to see, well, where are you at on your jobs? And like you said, I mean, for me, that's one of the greatest examples is that somebody could be starting a project and they're overbilled. And so on paper, on a cash basis, it looks like you're making money. But the reality is that isn't earned yet, so you still have to work you have to earn that revenue that you build for. And so if you were to just look at that on a cash basis P&L, shows you're making great money. On a true accrual basis P&L, there would be adjustments, like you said, the over under adjustments in your WIP report that would allow you to see, no, this is actually the earned revenue, and therefore this is only the amount that we've worked for. All these other billings we still owe, the client, and therefore those kind of get, accrued off over time as you continue working. And so yeah, I think it definitely can't be viewed in a bubble that accrual basis WIP reporting, it's necessary for, outside parties to understand, what in the world is going on within your jobs too. And because if you just look at cash basis, you don't get the visibility you're looking for. Interested though, Rachel, is there ever really a good time, we're talking about this reality that accrual basis and WIP reporting, especially percentage of completion accounting method under accrual basis, like these things are good things, right? Is there a time at which cash basis really makes sense?
Yeah. So I think oftentimes in the beginning of starting a construction company and maybe you just have a couple of projects and you really are focused on cash. Cash is king at that time. You, as the business owner, are probably really involved in all of the checks that are coming in and all of the payments that are going out and how each job is performing. And so, from a simplicity perspective, that may be the easiest and most cost effective, the easiest for, your team, accounting team, and others to understand. And so it's super common. And I would say it's appropriate when first starting a construction company. And then as the company grows, as a business owner, you get pulled into, um, having other responsibilities and continuing to try to have good oversight into how all of these projects are performing. You're continuing to grow your team, and then also just really wanting to have a better understanding or a deeper understanding of project performance. It's another great metric to not only do I feel good about these projects and the revenue that's coming in, but how are we truly performing under this, percentage completion method? And does that also check out with, my intuition as it relates to how all of these projects are performing? Because, yeah, it becomes more difficult as the business owner to continue having a good line of sight on all of those things. And it can be one of those areas that just triggers really quickly. I'm underbilled. Why has my project manager not billed an appropriate amount to the owner this month? Well, I can go talk to that project manager and just understand if there's something challenging there, if there's a change order that they're working on that hasn't come through, right? It's just a great trigger to why is what's going on here?
Yeah, no, 100%. And I think it's to that point, it's giving visibility. And I generally like to think, because, within accrual basis accounting, there's all these rules like the matching principle and all these, like they call them GAAP rules, general accepted accounting principles, right? But like, I think that there's an application. I think that if I remember back to accounting classes, there's a theory or the idea of conservatism in accounting, and that's ultimately what accrual basis is trying to do, is to put you in a position where you couldn't be trying to prevent an overstatement of what the results are. And so it's trying to get everything into a conservative viewpoint. I know many business owners will say, but yeah, but I want to show we're doing great, and it's like, yeah, but at the same point, the banker wants to see that, hey, you have some sustainability in operations. And if they look at you and you're doing great, probably they're going to be a little bit scared that, hey, like you're growing really fast. That demands a lot of cash flow. Are you going to be able to handle that growth? That's the question that's going to be coming to their brain just as much as it would to a surety representative, that you grow really quickly or you have, explosive years. Are you going to be able to pull that off going forward? Is something wrong here? But generally, when you're showing things from a conservative standpoint that, hey, this is all cost in and this is adjusted revenue, it makes them feel more comfortable once they actually see the end result and it's looking sharp still. And so I try to think of it from a standpoint that, yeah, it's kind of a more conservative method that doesn't overstate potentially. And hopefully that's helpful for our audience. So I, I am interested for a lot of even our clients. They have the question in the back of their head, what's the right time to make the switch? Because what you're talking about, all these over under adjustments, it starts to get a lot more technical. There's a lot more things to track more closely. And those usually demand more resources, right? Whether it just be from a time perspective as well as a technical competency perspective. So it creates a greater resource demand. So kind of in your opinion, in your perspective, and even if you can give some examples to this, when should contractors consider what's the right time to move to accrual basis if they're on cash basis?
Yes, absolutely. Well, and there's a couple caveats here too, right? We can talk about internal reporting of our financials and how we're looking at it, but then also from a tax perspective, when talking to tax professionals and depending upon what your tax planning looks like, if you want potentially greater control over the income that you report in each respective year, you might say, gosh, I don't want to go to accrual for those reasons, right? And so I think a good general rule of thumb is around the $5 to $10 million revenue mark is a good time to start thinking about it. Like I said, sometimes too, just the understanding of the fundamentals and starting to position yourself in a place where you're reviewing that information, even if you aren't recording some of those entries, can be a great way to kind of stair step into what that might potentially look like. Certainly, working with you and other clients that I've been connected with, we at Brady CFO are just a great resource as it relates to if you're thinking about, hey, it might be the right time, starting to engage in some of those conversations around, and a lot of our audience, I assume, also has relationships with bankers and surety, and getting some guidance from them or their CPA contacts can also be especially helpful. But I would say, as a general rule of thumb, around the $5 to $10 million revenue mark, and then duration of project. Right, there's a difference between if your projects are turning in less than a week's time, or if your projects are a 6 to 12 month, it just takes a lot more oversight in how that job is performing, and you'll want a greater line of sight if you've got a longer project duration.
I feel too, probably, and I agree with you about the revenue metric. We've generally seen that starts to kind of be the trigger point, which you got to start seriously looking at it. Um, I feel like too, like once you finish a job, can you answer the question as to whether you are profitable or not? And if you can't answer that question, I mean, there's even nuances in accrual basis WIP reporting that you still got to work through to make sure that you arrive at that question appropriately. But if you get to the end of a job and you can't answer that question, it could be a serious consideration that you probably need to move, right? And even as you're navigating throughout the job, if you ask that question, which you and I have come into situations before and worked with clients where we said, so what was profitability and what was revenue last year? And then, what was, job profitability? And they point blank can't answer that question 4 to 5 months later, even. And there's some accounting general, like just accounting management concerns that cause that. But also, I definitely feel like it has a lot to do with the lack of, more sophistication in the accrual basis of WIP reporting as well. That, hey, do you really understand what your job performance is? And, just outside of, you got a bunch of cash receipts coming, you got bills, that are coming in. Do you really understand whether you're profitable or not? And it's generally really hard to answer that question cash basis. I feel, for the exact reasons we mentioned at the beginning, your revenue could be sitting months ahead of your expenses. And so, you're paying your expenses, but then your revenue's coming later unless you overbill. But again, where do you find the middle ground in all of it, right? And hopefully that's where accrual basis comes in. But um, tell us, what is involved in migrating to accrual basis? Because I know for some clients this could be a big shift. For some clients, it could be not so bad. But yeah, what all is involved to do this?
So, probably the first and biggest piece of it is just making sure that on a per project basis, you have really great accounting in place and set up so that you truly understand per project. This is what my revenue is. I'm capturing all of my direct expenses. All the project expenses are being accounted for appropriately. That's step number one, is just making sure that we can look at your revenue and expenses on a per project basis. And then certainly setting up, okay, now that we know what each project is doing and we have the estimated profit, let's go ahead and start to set up that spreadsheet, that WIP spreadsheet that shows each contract amount and how much we billed to date, how much cost has been incurred, etc. We can start to look at, at a snapshot in time, are we over, under billed? Does the information that we've put into the WIP report, does it make sense? Like, are we truly capturing the job cost the way that we think we're capturing job cost? Or Is there kind of a disconnect? We've worked with some clients who their current ERP software just isn't working great for them, or there's some breakdown there with outside bookkeeping and other things. And so sometimes that leads to further conversations around this is our ultimate goal, but we got to take a couple steps back to clean up some of this old stuff. And then certainly looking at our AR and AP and understanding the impact. So, under cash basis, my accounts receivable, it hasn't been received as income, and so I don't need to account for it under an accrual basis. Well, yes, now that's revenue on my books, and so sort of just talking through and understanding conceptually how each of those is going to adjust, and it's a progress, or it's a progress right through each of those steps, and making sure that we all understand how that change is going to impact the organization and the financials.
I wanted to not miss a point you mentioned earlier because I think it's important for our audience if any of them are still in cash basis and considering the switch. Um, Rachel mentioned that there is, from an IRS, federal tax limit standpoint, there is a limit on how much average revenue you can have over. Right now, the rule, the tax law says 3 years. Believe that number sits around 30 million, but please check with your CPA just to confirm. But once you start hitting that size, you automatically have to switch over to accrual. But previous to that, you could be hovering, for a couple of years below that. Um, you can still file your taxes on cash basis while internally, and for, we call it assurance or getting a CPA review or audit that usually is demanded by your surety rep or for bonding. You can have all that on accrual basis. You can have, you can do taxes differently than what you do for internal and for other third party perspectives. And so, the switch, it's the idea that, for our audience to understand is once you make that switch to accrual, it's giving you greater visibility into what's happening in your business. From a tax perspective, you can still stay on the same basis and prepay expenses and not have to worry about, hey, I'm booking revenue that maybe I'm underbilled on a job, but I'm booking revenue because I've earned that revenue. But yet, naturally you have unearned, revenue. That means you have more expenses. You naturally wouldn't want to be taxed for that revenue when you have, maybe not the cash flow that you're looking for because you're underbilled, right? So, that wouldn't be the best combination. So you can still stick on cash basis. Like this can still happen. There's methods that the CPA, can do to make sure that it comes out to cash basis. They can convert your accrual basis books to cash basis. Your ERP system or your accounting system may have a toggle switch that allows you to report in two different directions. So I want to be sure. Um, I know I've had it before where I talked with, a client's bookkeeper about doing this and they said, no, 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 we can't maintain two sets of books like that. That's fishy stuff. And I was like, nah, this is pretty common that it's accrual versus cash. It's not like we're keeping the secret set of books or something here, where we have all of these expenses that shouldn't exist type of thing. But yeah, I just want to make sure, because you highlighted that, Rachel, I didn't want to lose sight of that, I think this is a value add for clients, or for, our listeners, I should say, is, moving to accrual basis does not necessarily immediately demand that you move to accrual basis for taxes too. There could be, a way that you could still navigate both. So any final thoughts on that, Rachel?
Yeah, no, I'm just glad you pointed that out also, because we do, encounter some clients who say, "Oh, I don't want to go to accrual," feeling like they lose some control over some of those tax planning tools that they might feel like they have. At those lower thresholds, and certainly there's some truth to that, and so it's important to talk with your tax professional. If you may need to talk to other tax professionals in the case where you're sort of questioning some of the information that you're getting, but be an advocate for yourself and just really understand how those changes are going to impact you and what your options are.
You and I have encountered it where, you know, companies are beginning to consider this switch. And I mean, I have a friend that's a Vistage member that they have a platform. Literally, he got a question about, another Vistage member converting from cash to accrual, and he sent it my way and said, "Can you at least help answer their questions?" Right? It's a common thing that I think you and I have both found that sometimes the internal team members, they don't have the depth or the capacity to know how to navigate this. Like the plan that you kind of outlined there, just okay, how do I actually dive in and make this happen and make it happen appropriately? They just don't have the internal team depth. So what would you recommend to the client that maybe they have, an accountant or a bookkeeper, that solid person still knows how to do the job, but it's just they're missing some of that technical capacity to be able to make this switch and maintain it going forward. What would you recommend to them?
Yes. Well, as I've worked with you and with other clients, certainly finding an advisor, a fractional CFO, someone who has some of that experience and can help their team in, you know, what we've generally found is a limited capacity, right? If we're talking about an organization that has 5 to 10, even 20 million in revenue, they might not at the time feel like they have the capacity for a full blown CFO or sometimes even controllers or finding someone with the right and relevant experience. But certainly, Brady CFO provides fractional CFO and also controllership. Services. And so we can come in on a limited basis and help, teamed up with their team members, help them understand kind of how things are currently operating, what recommendations we might have, and how a change like this would impact their organization, what it would look like practically speaking, help build out some of the framework around uh, how things need to be processed and accounted for appropriately. I would also say getting some guidance from your CPA firm may also be a really great resource for you as you continue to grow, or your surety, right? You have all of these great resources and partners, and so I would just start having conversations and interviewing and finding partners and find somebody who's a really great fit. Right? We want to work with those that we get along with well and that we trust and are respected in their respective industries. And so, just start being an advocate for yourself and understanding what some options might be.
I think as we kind of talked through some of this, it made something come to mind. Um, I think for our audience too is seeking to understand where you want to go with your business, because there is a technical shift that has to happen, and it does demand, some more technical resources. This is, right now you could be working really well with a part-time bookkeeper that comes in, manages your books on cash basis. But to bring in a fractional CFO, honestly speaking, yeah, you're gonna have to have some financial resources to make that happen. So it's a commitment that you're wanting to grow and you're wanting to understand better about your profitability and how to continue to grow, expand, but also, I think of it in a mindset that, in wanting to make the switch, you're wanting to grow, because the reality, a smaller contractor could probably have a pulse on how their jobs are performing, probably themselves. Like if it's a $5 million, contractor, they probably have their own internal posts because the owner probably has some involvement in the jobs themselves. But there has to be a desire to grow. And if there is, you're going to expand, you're going to have additional team members. The depth of kind of what you said, that you have to understand where that job profitability is at, but you're no longer involved at the jobs as much anymore. And so you have to move and migrate towards this. But also, for any business owner, I just think it should be a consideration if the outside parties are asking for these things. It's because such as surety, such as banking, it's because they can't understand your financial position without them. And I think even for business owners, as you're looking at life, et cetera, what you're trying to build and grow, um, you know, you may have to exit your business at some point in time too, right? That, they say, most business exits happen because of not necessarily by planned events, like people, an owner may die, get disabled, there could be divorce, whatever the case is. But the reality, if somebody were to come in, buy your business, whatever the case is, they would want to have really good accounting records. They'd want to have accrual basis accounting, because then they can actually understand what's going on and what's happening inside this business. And with cash basis, it's just really tough to do that. It requires the pulse of the owner to still be involved in order to really be able to say this is what's happening. And so if you want to grow, I eventually you're gonna have to make the switch to accrual, even if maybe a third party isn't, involved. That in order to delegate out to your team and get some accountability of financial details and data back up to you, you're gonna need accrual basis accounting to really understand where things are at. So even one of the trigger points to understand for our audience, if you're looking to grow, you're not gonna be able to stay on cash basis forever. And IRS standpoint doesn't allow you to do it, but just, from a mindset perspective, you're eventually going to have to make this investment if you really want to grow your business. And so this was great, Rachel. I appreciate you kind of deep diving the technical aspect of what's required here and what's involved. Is there any highlights that you want to leave the audience with in regards to any final points that you're like, man, I wish, some of our clients knew this when they were considering, moving to accrual, or any interesting things out there for us?
Yeah, I just think the more knowledge that you have about your projects and how your business is operating, you're so much better positioned to make business decisions and to understand and to also identify when there's challenges or things aren't going well. And so, even if you aren't sure that you want to make the change, you're not sure either internally or for tax purposes that you want to make the change, I I would just encourage you to to get connected with a resource to try to understand what your projects would look like on an accrual basis and with with the formal WIP reporting being done on a monthly basis, because I think that knowledge is going to help project you and be more successful and help you to continue to grow and have greater insights. So that would be my only last note.
Yeah, 1%. And to that point, if any of our audience hears this, by all means, reach out to us. Like, we'd be happy to have a conversation. Just reach out to us. And, if you have questions about what's involved here, happy to absolutely answer a question. So don't hesitate to reach out. Thank you, Rachel. So glad that we could have you on, and looking forward to the next episode where we get to dig a little bit deeper into construction, accounting, and finance further.
Yes, absolutely. Thank you.
Awesome. Hi, everyone. So, if you enjoyed today's episode and you found value, or it raised some questions for you about the next best steps for managing your finances in your construction business, please reach out to us at bradycfo.com. There's a contact page there where you can fill out, and that will come straight over to us. Either that, or you can personally find me on LinkedIn. My name is Mason Brady, and feel free to send me a message, and happy to chat and talk through anything you're facing today, and happy to provide some advice. So thank you all. Appreciate it.